everyone, today is June 15th, 2022. Welcome to the 7th edition of Nigeria Today News. Today, our focus will be on the current currency exchange rate in Nigeria. Before the full details, let's flip through some major news. Fumi, over to you.
According to the data obtained from the FMDQ, when Naira is traded officially, the exchange rate between the Naira and the US dollar opened at 418.35 Naira to $1 on Friday 28th. After it closed at 420.33 to a dollar on Thursday 19th May 2022, the dollar to Naira exchange rate has maintained an average of 416.69 to a dollar since the beginning of the new year.
The US dollar to Nigerian Naira exchange rate 10 years ago. Let's see the historical data page for the year 2012, covering 366 days of the USD NGN historical data. The best exchange rate was 163.33 Naira on 15th June 2012. The average exchange rate in 2012 was 158.79 Naira, while the worst exchange rate was 155.91 Naira on 31st December 2012. For me, please read another news.
The Nigerian currency extended its slide against the dollar on Wednesday, dropping to a new all-time low at the parallel market in Lagos. The Naira has been falling steadily since the start of this month amid the lingering scarcity of foreign exchange in the country. Despite the rise in forex reserves Wednesday from 532 per dollar on Tuesday, it has lost 5.73% of its value since August 4, 2021, when it closed at 506 per dollar.
Thanks, Fumi. Let's take a look at the rate of Naira in the past. Over the years, Nigerian Naira relationship with the US dollar and other foreign currencies have been erratic, unpredictable, violent, and full of heartbreak and tears. The built-in dysfunction has also made a lot of people very rich. Over the last 10 years, foreign exchange demand, specifically for education and healthcare, has cost the country almost 40 billion US dollars. As you may know, this amount is equivalent to the total current foreign exchange reserve of the CBN. If we were able to avoid a significant portion of this demand, the Naira will be much stronger today. According to Nairametric, a leading Nigerian online newspaper, Nigeria and its corporates spent the sum of 55 billion US dollars on foreign expatriate for business, professional and technical services in the last 10 years. Similarly, personal travel allowances gulped a total of 58.7 billion US dollars over the same period. In fact, in the 9 months between January and September 2019, the CBN sold $9.01 billion to Nigerians for personal foreign travels. In September 1986, the second-tier foreign exchange market, SFEM, was introduced as part of the package of IMF reform that General Ibrahim Babangida IBB was forced to accept given the mess that Nigeria had managed to find itself. Before this, in the 70s to the early 80s, the Naira exchanged for some things like 90 kobo to $1. By the time IBB left office in 1993, the Naira was exchanging from 17 Naira to $1. It was during the time that bureaus de change were introduced into the economy. Abacha took power from that day to the day he died on June 8, 1998, a period of some 5 years. The official exchange rate of the Naira to the dollar never changed from 22 Naira to $1. The Autonomous Foreign Exchange Market, AFEM, was introduced in 1995 as a way for the Central Bank of Nigeria, CBN, to sell forex to end users at market rates. Other things we see today were also experimented under Sanusi. He suspended the IFEM for 6 months when the Naira came under pressure and also introduced a limit to the margin above CBN's rate. The bank would sell their forex for current Governor Godwin Emefiele is doing the same thing today. When oil was trending at $110, Nigeria had a margin of around $80 to play with. But when oil drops to $45 as it has now, that $80 margin turns to $15 as the cost of getting the oil out of the ground still has to be incurred. While oil prices have dropped by 60%, the revenue available to Nigerians have dropped by 81%. That is, revenue have dropped much more than oil prices have dropped. Nigeria is earning almost nothing these days. And you can imagine how disastrous it would be if only oil prices drop further to $40 or even less.
What is happening around the country as regards the changes in exchange rates?
According to Nigerian experts, 4 million micro, small and medium enterprises may fail this year as the naira fluctuates against other currencies, causing businesses to struggle and unemployment to soar. Nigeria is an import-dependent country, and whenever the naira is stressed and devalued, the economy struggles. The Nigerian naira dropped to a new record of 419.8 naira per USD on the official market on 14th May, following a currency devaluation on 20th May. The naira traded at 412.8 naira per USD, weakening 7.7% month to month, while the currency was 12.7% year on year and 7.7% year to date. Meanwhile, the NAFEX rate used by investors and exporters traded at 410.7, weakening 0.3% month to month, 5.8% year to year, and 4.7% year to date. The president of the National Association of Small Industries, NASSI, in Lagos, Gertrude Akimen, said the foreign exchange crunch has affected all segments of the economy, as some companies need to repair equipment and import raw materials and need foreign currency to pay their bills. The rise in the exchange rate is troubling because most businesses can't even import, and the war in Russia and Ukraine has made things worse. The devaluation of the official exchange rate was likely a move to unify the currency multiple exchange rate. The central bank devalued the currency twice in 2020, and it has traded within band of 380.0 since last July. The naira has been under pressure from rising demand for USA dollar as foreign investors pulled out of the country in the wake of the global health crisis, which sent oil price troubling. Looking ahead, prospects for the currency remain grim, and panelists expect it to continue losing value against the greenback amid structural high inflation, capital outflow, and the central bank prioritizing credit growth to stimulate economic activity. Focus Economics consensus forecast panelists sees the NAFEX exchange rate ending 2021 at 428 per dollar, while the official interbank naira is seen ending 2021 at 413 per dollar. In our 5th episode, we talked about COVID-19. And it's true that COVID-19 not only impacts the world's economy, but also influences Nigeria's currency exchange rate. The COVID-19 pandemic and oil price crash hammered Africa's largest economy, 90% of whose foreign exchange earnings come from oil exports, pushing it into its second recession in 4 years. It narrowly exited the recession in the 4th quarter, but the drop in oil revenue led to a balance of payments deficit of $14 billion last year and has depleted its foreign reserves. The government of President Muhammadu Buhari, who took office in 2015, has kept the currency artificially high as a matter of national pride. During the last oil price crash in 2016, the Nigerian Central Bank created a system of multiple exchange rates to avoid a large official devaluation. This included a market-determined rate for investors and exporters called the Nigerian Autonomous Foreign Exchange Rate Fixing, NAFEX. Nigeria's central bank devalued the naira official rate twice last year and has weakened the exchange rate for retail users. The bank has continued to gradually adjust the currency since the devaluations, limiting dollars' assets for import and implementing restrictive forex policies to support the naira. In our 3rd episode, we talked about oil crisis in Nigeria. It is very clear that the oil crisis in Nigeria has not only hurt economic development but also affected exchange rate fluctuations. After oil prices crashed from 2014 to 2016, Nigeria raised interest rates to attract investors. But when crude oil plunged last year, the foreign money fled. The central bank reduced yield on treasury bill to boost Naira liquidity. What Nigeria does instead is to increase spending. Once oil prices goes up with things like increased minimum wages, bloating the civil service, or even outright theft, politics always manage to bully economies. Except for the one time under Soludo, this is how things have always been. Nigeria is never ready for when oil prices drop. And yet, oil prices dropping is as sure to happen as night following day.
What is impacted by rate change?
Since Nigeria depends solely on the revenue generated from oil exportation, our economy is affected anytime there is a fall in oil price in the world market. This alone shapes the Nigerian exchange rate. The Naira-dollar exchange rate today is highly affected by fluctuating price of oil in the world market. The exchange rate of the Naira to dollar has always been a critical part of the management of the Nigerian economy since the early 1970s, when Nigeria changed its currency from pounds and pence to the Naira and Kobo. The currency exchange rate has always been a challenge to economic managers in their bid to determine the optimal value of the Naira against the major currencies in the global economy. The currency of any country is the mirror of the economy of that country. The Nigerian economy is a monoproduct economy, which is 90% imports dependent oil on the major product of the Nigerian economy is priced in US dollars, and hence the principle of demand and supply, which governs the rate of a currency, does not impact the Nigerian currency about this single product. When exchange rates change, the prices of imported goods will change in value, including domestic products that rely on imported parts and raw materials. Exchange rates also impact investment performance, interest rates, and inflation, and can even extend to influence the job market and real estate sector. Recently, the Central Bank of Nigeria took a stand on inflation, raising its benchmark interest rate to 13% from 11.5%, up 150 basis points. However, some experts and academics say the rate hike will not help Nigeria's inflation. In theory, rising interest rates are meant to reduce the amount of money in circulation, thereby reducing inflation. However, a cursory study of Nigerian inflation and interest rate data shows that there is a major disconnect between theory and practice, and that monetary policy is ineffective in addressing Nigerian inflation. According to Dr. Muda Yusuf, CEO of the Center for Promotion and Private Enterprise, CPPE, the ineffectiveness of the monetary policy rate is containing inflation is related to Nigeria's economic structure and the existence of the informal economy. The Nigerian economy is not a credit-driven economy, unlike many advanced economies, which have higher level of financial inclusion, a strong consumer credit framework, and a strong correlation between interest rates and aggregate demand. Gertrude Akime said the foreign exchange crunch has affected all segments of the economy, as some companies need to repair equipment and import raw materials and need foreign currency to pay their bills. The rise in the exchange rate is troubling because most businesses can't even import, and the war in Russia and Ukraine has made things worse.
Which is the way for Nigeria?
The way out is for government to fine-tune its demand and supply management policies to rescue the Naira from further decline from other currencies. The key thing for the market is to not allow for more flexibility in the pricing of the investors and exporters' windows rates to completely narrow the spread between the NADEX and the parallel market. The main losers in this unending economic somersault are fixed income earners, as well as the large army of the unemployed who rely on the already impoverished income earners for their sustenance. Nigeria appears to be at the crossroad in this seemingly unending crisis of the falling value of the Naira vis-a-vis that of other foreign currencies, particularly the United States dollar. The current risks to the local currency are numerous. These range from a depleting state of the foreign exchange reserve, declining foreign capital inflow, heightened political risk, narrowing fiscal space, and the generally poor management of the Nigerian economy. These have proved interactable for quite some time now, and the situation appears to be getting worse.
What is our suggestion at Nigeria today?
The government should fight and strengthen the export base of Nigeria against the import base, to the point that our export base to import base ratio will be 2:1. This will leave a sustained impact on the Naira value. The government should fully encourage local manufacturing and remanufacturing of goods, as this can make the first recommendation obtainable. Nigeria should do everything economically possible to strengthen the value of the Naira in the forex market. This, however, excludes pumping billions of dollars into forex market, as this only creates a temporary economic condition. Nigerians should be encouraged to buy local goods, education and health, among others. Local industries should be protected. The issue of corruption in the area of smuggling and convenience by the Department of Customs and Excise should be looked into and addressed. Please drop your comments, questions, and suggestions below, as we will be taking them one after the other to analyze. Don't forget to subscribe to our YouTube page, Nigeria Today. I am Oyiza Avi. Thanks for watching.